top three things in his macro notebook from this morning. So number one being the 10-year yield, big decline in the 10-year to year-to-date lows here. That's down 71 basis points year-to-date, and they effectively continue to crash versus consensus expectations of rates rising. So most bond proxies and equity land basically ripped on the dovish Fed move yesterday, but we would just sort of counteract that by saying don't confuse that with growth. Number two, the U.S. dollar is obviously a lot of correlation risk developing and has been developing in the marketplace, specifically since last Friday when gold was pinned basically below 11.80 and the U.S. dollar cross was at $1.25. Obviously, that reversed fast here. So we basically see a currency war sort of accelerating between the Japanese, Europeans, and Americans. And the one caveat we sort of add to that is that this is still way too long of U.S. dollars, sort of given the entrance of a more dovish Fed into this sort of war. And then lastly, in Japan, Abe obviously does not like a dovish dollar because he's basically getting up yen and down Nikkei on that. And so the Nikkei was down another 66 basis points overnight to down 3.5% year-to-date. And so it'll be interesting to see as the Japanese react to both the ECB and Fed sort of devaluation talks in the coming months. So that's something we'll keep an eye out for there, and we continue to be negative on the Nikkei there.